Welcome back to the channel. It's Leverage, and this is the second part of our candlestick series. If you're serious about understanding the markets, this is where it gets real. Today we are diving into the candlestick patterns, the ones that traders watch like hawks. These patterns tell stories, and I'll show you exactly how they play out on the chart. Grab your pen and let's level up together. Section 1. What are candlestick patterns? Candlestick patterns are specific formations created by one or more candles on a chart. They help traders predict price direction, like whether a trend will continue or reverse. There are three main categories: single candle patterns, double candle patterns, triple candle patterns. Let's break them down one by one. Section 2. Single candlestick patterns. Single patterns are made up of one candle. They often signal indecision or reversal. The most common ones are doji, small body, long equal wicks, means market is undecided. Pin bar, small body, short upper wick, long lower wick, signals bullish reversal. Shooting star, bearish reversal pattern, long upper wick, short lower wick, small body below. Hammer, small body at the top, long lower wick, no upper wick or small upper wick, signals bullish reversal. Inverted hammer, same structure as the hammer but upside down. Watch how this hammer candle formed at the bottom of a downtrend on the BTC chart. Boom, reversal followed. Section 3. Double candlestick patterns. Double candlestick patterns involve two candles side by side. These are great for spotting momentum shifts. Key examples: bullish engulfing, a small red candle followed by a bigger green candle that fully engulfs the previous one. Bearish engulfing, the opposite of the bullish engulfing. Green first, then a stronger red candle that fully engulfs the previous one. Tweezer bottoms / tweezer tops. Two candles with matching highs or lows. Strong sign of rejection. Section 4. Triple candlestick patterns. Now let's talk about triple candlestick patterns. These are formed by three candles that appear one after another in a specific formation. Triple patterns are very powerful because they give stronger confirmation than single or double candle patterns. They often signal major reversals or strong trend continuations. Let me explain the most important triple candlestick patterns that beginners should know. Morning star. This pattern signals a bullish reversal. It usually forms at the bottom of a downtrend. The first candle is a strong bearish red candle. The second candle is small, either a doji or a candle with a small body showing indecision. The third candle is a strong bullish green candle that closes above the midpoint of the first red candle or above the 50% level of the first red candle. This tells us that the sellers are losing and the buyers are stepping in. When you see this at the support level, it is often a sign that the market is about to move upward. Evening star. This is the opposite of the morning star, and it signals a bearish reversal. It usually forms at the top of an uptrend. The first candle is a strong bullish green candle. The second candle is a small candle and shows indecision, similar to a doji or a small-bodied candle. The third candle is a strong bearish red candle that closes below the midpoint of the first green candle or the 50% level of the first green candle. This tells us that buyers are losing strength and sellers are taking over. It is often followed by a downward move. 3 white soldiers. This is a strong bullish continuation pattern. It usually appears after a downtrend or a consolidation. It consists of 3 strong bullish candles in a row. Each candle opens within the body of the previous candle and closes higher than the previous candle. The bodies are long and the wicks are small or almost invisible. When you see this pattern, it shows that the buyers are in full control and the market is gaining bullish momentum. 3 black cross. This is a strong bearish continuation pattern. It usually appears after an uptrend or consolidation. It consists of 3 strong bearish candles in a row. Each candle opens within the body of the previous candle and closes lower than the previous close. Just like the 3 white soldiers, the bodies are long with small or no wicks. When you see these patterns, it's a strong signal that sellers are taking over and the price may continue to fall. Section 5. How to use these patterns. Now that you know the patterns, here is how to actually use them. Always check the trend before the pattern. Combine it with support and resistance zones. Don't rely on candles alone. Use them with other confirmations like RSI or volume. Patterns help, but don't guess. Observe and react. Quick recap. Single candle patterns shows quick reversal. Double patterns reveal market shifts. Triple patterns give strong trend signals. If you can recognize this, you read the market like a story. This is how you start mastering candlestick patterns. In the next video, I'll show you how to trade with them live on chart, step by step. Subscribe if you haven't, so you can leverage yourself every week. Don't just watch the chart, understand them. Peace out and stay leveraged.